Hey traders, Nick here. I wanted to do a quick video on how to protect a portfolio. I don't want to alarm anybody. This is not the timing. Today was down day to start, but it's not that scary. The game has not changed per my notes. I'm still biased long. And so today's message is how to just basically in general protect portfolios. I'm going to try and be as thorough as possible from all different perspectives. All right, so what am I looking at? This is crude. That's not what I'm looking at. Okay, so let's start with the S&P. Okay, so today is a down day, but nothing that we haven't predicted. This box I drew recently to show the possibility of the downside where I think will be support because it's the neckline from prior breakouts. So from here, how do I protect? If I'm long things that are in the S&P or in the Qs, let me go to the Qs. What are the Qs? It's the NASDAQ. So if I'm long stocks like Google, Apple, Facebook, Netflix, momentum stocks, semis, MU, Intel, anything that's technology related, I have risk, technical risk. The underlying fundamentals are still great for most of them, as I've shared with you, but technically, if we break this one, we might come down to this one, which is the breakout area of last time. So it's not inconceivable. So to protect a bunch of technology trades, I could buy QQQ puts. I can either buy them right here, right now, or buy a lot more for the same cost out of pocket down here in case we do break down. Now, mind you, protection is wasted money. You're going to freak out about this, but do you worry about buying? Do you make the decision to buy insurance on your car based on if you're going to crash or not? I don't think so. It's money I have to spend to stay in my longs. Otherwise, I close my positions if I want to sleep well at night. So for timing, I go out in time, meaning I don't do it for this week unless there's an event this week I'm covering. In this case, I want to go out at least to July. Give me a couple of weeks of cover. This way, I'm not wasting my premiums right away. I could have some red in the premium, and then I change my mind. I say 2 days from now I feel better about everything. I can sell them back out for partial gains or losses. So that's how I would play protection. It's not so much if I do it or not. It's how I do it. Because if I'm worried about my portfolio and I have thousands on the line, I'd be an idiot not to spend a few $100 to protect my however much I'm protecting. So I don't go all in protecting the worst case scenario ever. I need something to stop the bleeding in order to give me some cover to get in and fix my trades on a big down day that changes the game. This morning does not change the game. Okay, I'm going to show you the small caps. This is the IWM. In fact, they're close to being flat. They're minus 0.22%. That's a basket of 2,000 stocks. Why? Because these guys don't care about tariffs as much. So but what I said is, and this is an all-time high yesterday. So if I closed my eyes and said, there is no news, give me the P&L and let me look at the P&L of any company, would I buy it based on the P&L itself? So that's how I do my decision as to, is the thesis broken? No, I don't see it yet. Is the, how do I protect? Then it depends on what I'm trying to protect. Remember this blue dip? We're still within it. Yesterday I said 2738 in the S&P E-minis. That was the SPY. I wouldn't surprise me, and we came to it within a couple of dollars. So everything we see here is still within the playbook. Now, if something comes out and it's outside of the playbook, then I start worrying. Okay. But so far there's no worry for me. I do protect. Maybe I start with getting less long. So if I have winning positions, like if I had greens from Google from yesterday, I should have booked them in the morning. They were still really green. They're still green right now. I can still book them and walk away. Say, yeah, it wasn't ideal in exit, but I still made money and I'm less risky. So I de-risked myself by booking profits. How easy of a decision is that? I can always re-engage long. Okay, so this is the idea of how do I book, how do I protect? Easy way, puts on the SPY, puts on, depends what I'm long. If I'm long Caterpillar and Boeing, those two are really hit hard because of the tariffs. So to protect those, I would have to do something with the DIA because it's heavy with these guys. If you look at the DIA's top components, they are stuff that is that are, what do you call that? In the line of fire of China. For example, Boeing. Conceivably, people think it's in the line of fire. They don't have a choice. They're going to have to buy Boeing jets. Besides, Boeing doesn't need China as much as China needs Boeing. Boeing has sales for 10 years booked, so more. So anyway, that's just an example. Caterpillar, okay. UTX, they make elevators and things like that. Yes, they're in the line of fire. I don't know, 3M maybe. I don't know. Stocks that are in the line of fire are heavy hitters in the Dow. Now, another note. So to cover all of these trades, if I'm long cat in those, I would buy puts in the DIA. But it moves a lot faster, you can see. And I've had less success trading the DIA. So I like the SPY. It's a little bit slower. I like the Qs, and the IWM, really like them. So, all right. So this is just how to protect. And what's at stake. One note, side note, nothing to do with this. XLF, the banks, they're being hit hard. Not sure the logic behind it. They're so cheap already. Yes, they can get cheaper. But note, important note. This week, Thursday, I think I don't know what time, we find out the stress test results. Say that fast. And they may be cleared to do some stuff. Like the banks may take the opportunity, like Citigroup may take the opportunity to say, hey, now that we passed the test, now that we have less rules, now that we can trade our own stuff, now that we're not labeled as too big to fail, maybe I can do some stuff with buybacks. Maybe I'll maybe up the dividend. Maybe do this. So there might be some financial engineering. I can tell you they will move. In which direction, I don't know, but my hunch is up because they're already dang cheap. And if they move down, I will go even longer banks. I'm long now Citigroup. I'm long Bank of America. I have a losing trade in Goldman Sachs for the upside. Let's put it up on the screen. Okay. So I'm speaking my book, but Goldman Sachs, I saw two possibilities. I may have shared it already. So breakout 1 to 2 or breakdown. Guess what happened? Breakdown. But I like this candle. It's rejecting about the same area that has rejected the last 2 or 3 times. And this is a pivot point longer term. So what kind of world are we? What kind of bad news is going to come out from the stress test results that's going to cause a bigger dip? However, if we do lose this part right here from Goldman Sachs in specifics, we could see 215 pretty quickly. So I'm not calling for it, but it's a possibility. So if I'm long Goldman Sachs, I could spend a few bucks on a put spread in 217 area, 217 and a half, 215 for the next 3 weeks. That makes me recover my cost if I bought calls. If I bought a call spread, I probably don't worry about it much, or would do the same, but less so inclined. That's just me. Okay, and if they do drop it dramatically, I'll probably sell a put spread or puts in order to get long Goldman Sachs with conviction. Now, when I buy calls and call spreads, it's with minimum conviction because it's a breakout based on technicals. When I sell puts, it's on conviction because I believe in that level I'm selling against. All right, Nick signing out. I don't want to take it too long. If you have any questions, let me know.